Hey everyone, in today's video we're going to be going over how to spot absorption and order flow. And before I get to the section that I want to review, we had a thesis today, and that was to fade extremes based on the FOMC coming out this Thursday and a few other numbers. So we observed that the market sold off from this flag, respected the 33.5 level that was put in late September, early October. Rallied back up to the 801.5 level and kind of settled here in the middle. On Monday, we opened, dipped below, came back up, and then started to sell off. And so that's what it looks like on a 30. And the open was here. If some traders had the thesis that the market was going to continue below this 33.5 level, they may have gotten short down here. So I want to show you what it looks like on a footprint chart, because when we look at the footprint chart, we can see how the sell orders, the market sell orders, are interacting with the bid limit orders. So this is a 1-minute footprint chart. And the numbers here on the left show every time a market sell order matched with a limit bid order. And the right side, let's open this up a little bit. The right side is going to show anytime a market buy order matched with a limit sell order. So around 8:50, 9 o'clock, we started to dip below 33.5. Came down here to 28 quarter, came back up and dipped below it. Now, on this second push down, we can see right in this area, there was a significant amount of volume traded both on the bid and the offer. And there was a ton of volume on this bar, 9,200 contracts with a market delta of negative 483. So there was more market selling than market buying, indicating that longs were either exiting their position due to a stop or just dumping their position. In addition to that, there could have been market selling, speculative shorts entering the market, expecting a continuation down. Now, the difference is that on a 1-minute, you can't really see what's happening with the limit and market orders unless you have a volume profile here, which I do. And there was thin volume in this area, and then it, created some volume in this area. But you don't get to see the detail of these large bid orders absorbing all the market selling. And then in addition to that, there was market buying at the same time. So this, in conjunction with our thesis of fading extremes, could have been an indication, and actually was an indication, that the market was potentially not going lower at that time. So we had a big spike in volume. The next bar, all this market selling turned into market buying. Less volume on this bar, came back up above 28 quarter. Hovered here around 33.5, and this was my indication to get long. So I entered here at 33.5 and exited at the overnight low of 40. One of the problems or challenges that I face is being patient and waiting for these setups, basically waiting for the market to show its hand before you enter a trade. This could have easily came down, retested the 28 quarter, and dumped again. My thesis was that because we were fading extremes today, at this point when you have more speculative shorts getting into the market, they're going to be wrong at some point, and they will need to exit their trade and turn into a buy. So my thesis was that if we started coming up above this 33.5 level, and then specifically above this 36 level, price would rally. and unwinding all of those shorts. So I took a long position there, scalped around here, still with a long bias. But there was one other area right here. So on the last bar, let's go there first. There were 9,245 contracts traded across 17 ticks. So not a lot of price movement, a lot of volume condensed in the lower half of this bar. When we go to this bar, there were only 3,980 contracts traded over 34 ticks. So less volume, much more movement. Now the difference is that when we were down here and price was coming down, there were buyers, bidders, stepping into the market and absorbing all of that downside action. On this move up, sellers were stepping away from the offer. So let's say you wanted to offer 45.5 and you started to see this come up, you might pull your offer or move it up. But that's what was happening here. It's extremely different from what happened when it dips below that 33.5 and 28.25 level. Buyers were stepping in on this bar, sellers were stepping away, indicating that nobody wanted to sell this level anymore. Nobody wanted to sell in between here. Sellers only started to step in here at the 52.5 level. And I think my original target was 56.5, which it hit. And then after that, it's pretty much chopped. But there's these two areas where, again, you can see the difference of absorption versus limit orders moving away from the last traded price because they don't want that action. So I hope that's helpful in how to spot absorption on a footprint chart. You can also do it on a volume profile chart. Again, we can see here, pretty thin, starts to get thick. But yeah, I like to see it mainly on the footprint chart. That's in my opinion, the best way to find out when there's absorption and when there's limit offers moving away from price or limit bids moving away from price. Hope you enjoyed the video, and we'll see you next time.